Good morning, students. In this session, we are going to cover MMPC 004 Accounting for Managers, previous year questions with complete answers. And we'll make sure you not only understand the concepts, but also learn how to present them effectively in your exam for maximum marks. Now, let us begin with accounting concepts and principles, which are almost guaranteed in every exam when asked about concepts like conservatism, cost, money measurement, and periodicity. Always remember that conservatism means we record expected losses but not anticipated gains. Cost concept means assets are recorded at historical cost. Money measurement means only monetary transactions are recorded, and periodicity divides business life into fixed accounting periods. Similarly, when writing about business entity, going concern, accrual, and materiality, clearly explain that business is separate from owner. Business is assumed to continue. Revenues and expenses are recorded on accrual basis, and only significant items are disclosed. Always add examples to make your answer strong. Now moving to financial statements, one of the most scoring areas when preparing trading account, profit and loss account, and balance sheet from trial balance. Follow a step-by-step approach. First calculate gross profit in trading account, then net profit in P&L account, and finally prepare balance sheet with proper classification of assets and liabilities. And if asked theory, define balance sheet as a statement showing financial position at a point of time, then classify assets into current and non-current. And liabilities similarly always highlight its importance for liquidity and solvency analysis. Next is cash flow statement. Another very important topic. Cash includes cash in hand and bank. While cash equivalents are short-term liquid investments, the cash flow statement has three parts: operating, investing, and financing activities. Operating includes core business transactions, investing includes purchase and sale of assets, and financing includes capital and loan transactions. Direct method shows actual cash inflows and outflows, while indirect method starts from net profit. Always mention AS. 3 and the purpose, like analyzing liquidity and cash management. Now let us understand journal and journalizing. The foundation of accounting. A journal is the book of original entry, where transactions are first recorded. The process involves identifying accounts, classifying them, applying golden rules, and recording with narration. Remember the golden rules: debit what comes in, credit what goes out, debit expenses and losses, credit incomes and gains, and always mention advantages like chronological recording and error reduction. Next, a very important concept: marginal costing versus absorption costing. Marginal costing considers only variable costs and treats fixed cost as period cost, while absorption costing includes both fixed and variable costs. In product, cost contribution is the key concept, calculated as sales minus variable cost. Marginal costing is useful for decision making like pricing and break-even analysis, but has limitations as it ignores fixed costs. Always present differences clearly in tabular form in exam. Now coming to cost and its classification. Cost means the monetary value of resources used. It includes material, labor, and overheads. Total cost is calculated step by step from prime cost to cost of production, and finally cost of sales. Costs can be classified as fixed, variable, direct, indirect, and relevant or irrelevant. This structure is very important for writing answers neatly. Let us now move to activity-based costing, or ADC, which is modern and exam relevant. ABC assigns overheads based on activities rather than volume. It identifies cost drivers and improves accuracy. Steps include identifying activities, assigning costs, determining cost drivers, calculating rates, and allocating costs. Always include one simple example for clarity. Next is budgetary control, a highly repeated topic. A budget is a quantitative plan for future. Types include sales, production, cash, and master budget. Budgetary control helps in planning, coordination, performance evaluation, and cost control. Steps include setting objectives, preparing budgets, comparing with actuals, and taking corrective action. Also remember, performance budgeting focuses on outcomes, and zero-based budgeting starts from zero every time. Now let us discuss variance analysis, Kennedy, which is very important for numericals. Variance is the difference between standard cost and actual cost. It helps in cost control and performance evaluation. Cost, direct material cost variance includes price variance and usage variance. Always write formulas clearly and explain causes like price changes or inefficiency. Next comes ratio analysis, which helps analyze financial performance. Ratios are classified into liquidity, profitability, solvency, and activity ratios. Activity ratios like inventory turnover and debtor turnover show efficiency. Higher turnover means better performance. Always write formulas and significance together. Now an advanced topic: Altman Z-score and DuPont analysis. Z-score predicts financial distress using multiple ratios, while DuPont breaks down return on equity into profit margin, asset turnover, and financial leverage. These are very important for conceptual clarity and analytical answers. Moving ahead to annual report and human resource accounting. An annual report includes financial statements, director's report, auditor's report, and management discussion. Non-audited items like chairman's statement and CSR report are very important for investors. Human resource accounting treats employees as assets and helps in decision making like training and manpower planning. Now, a very interesting and frequently asked topic: forensic accounting and fraud triangle. Forensic accounting involves detecting and investigating fraud. The fraud triangle includes pressure, opportunity, and rationalization. If even one factor is removed, fraud can be prevented. Always give examples like corporate frauds and mention the role of forensic accountants. Next is CP and break-even analysis, which is very scoring in numericals. Key formulas include contribution, P by V ratio, and break-even point. Always solve step by step. First find contribution, then fixed cost, then BEP and profit. Also remember, margin of safety shows how much sales can fall before loss occurs. Finally, remember some important exam tips. Always start with concepts, practice numericals thoroughly, show full workings, and structure answers properly. Focus on repeated topics like accounting concepts, budgeting, forensic accounting, and CVP analysis. Attempt questions you know best and maintain a balance between theory and numericals. So keep practicing, stay confident, and use this structured approach to score high marks in your exam. All the best for your preparation.